C-A-T-C-H-I-N-P-I-P-S. I've been C-A-T-C-H-I-N-P-I-P-S. I've been.
All right, y'all, this is my Peek-a-10 strategy. You'll more than likely need my specific template and indicators for this strategy. So I'm going to leave a link in the description of the video to my indicators and my templates. Also, the rules, I've got them written down. I'm going to leave a link to this Google slide so you can have the rules in writing if you want them. But let's go ahead and jump into it. So focus on this part of the chart where the arrow is. And the first thing that we want to look for is a break of a minor support or resistance level. So in this situation, price came down and it kind of made a minor support right here. It came up and then it breaks through that support level and closes. Once that happens, what we're looking for is for the H1 candle to come back up and peak just above the 10 EMA, hence Peek-a-10. But it's going to peak just above the 10 EMA. You see how that's closed barely above the 10 EMA right there on this green candle? That's what we're looking for. At the same time, when that happens, you also want to have a shark fin down here at this dotted line, which is the RSI 5. You want to have it making a shark fin just above the 50 level. If we're in a sell situation. If we were in a buy situation, you'd want the shark fin upside down, peaking, upside down below the 50 level. But also the shark fin situation, you want it like this Ehlers Fisher. You don't want the Ehlers Fisher to be up here as well. You only want the shark fin up here. So that's very important. And that is in those written rules. So again, if you want to copy those written rules, just go to that link in the description. After we have those rules met, so break of support, and then you've got the Peek-a-10 and you've got the shark fin along with that Peek-a-10. When you get that, what you want to do is go down to, you want to go to the reassurance template. Again, my templates are in the Google Drive, linked in my description. Click on that. And what you want to do is go down to the 15-minute chart. Let's see, I think that was December 31st when that happened. Yeah. All right. You want to go down to the 15-minute chart. The only thing that you're looking for on this template, on the reassurance template, is that the 400 EMA, which is the red line, and the 200 SMA, these are simple moving averages, but the 400 and the 200, you want to make sure that those are in the proper order for whatever direction you're trying to trade in. So if you're looking to trade down, then the 200 should be under the 400. It either needs to be down already, or it can actually be just about to cross over. So if it looked, I'm trying to find where it did cross over. All right. So like right here, let's say it was right just about to cross over. That's still acceptable. Now, if it's way over here and it's way above it like that, nah, we're not going to do that. But if it's just about to cross over, then that is acceptable. But that's the only thing that we are looking for, which we have that here. So as long as that's met, now we can go back to our main template. And what you want to do is just go ahead and enter the trade above the 50 moving average. So we basically would have entered right here, and then you would have caught, could have caught upwards of 100. That's over 100 pips right there. Real quick 100 pips. But essentially those are all of the rules. I'm gonna go over another example right quick because I want to make sure that you see this over and over again. Here's another one. So again, focus on where the arrow is. So the first thing we're looking for is a break of a minor support or resistance level. So this is another sell situation. So it's going to need to break support, which would be this one right here. It came down, up, and then as you can see, the H1 candle closed past this minor support level, and then it came up and closed just past the 10. Now, as long as less than half of the candle is above the 10, you're good. So if this was more than half of this candle above that 10 EMA, then it would be no good. So it wouldn't necessarily be peaking above it. It would be like, pretty aggressively above it. But you want it to just peak above that 10 and close like that. Again, at the same time, you want your RSI 5 to make a shark fin above the 50 level. we have that. Next thing we do is we're going to go to the M15 time frame. What day was the, here it is, there's my arrow. We go to the M15 time frame and we're going to check our reassurance chart. Crap, I done lost my spot. There we go. Check our reassurance chart. We're right here, and we need to make sure that the yellow is below the red or just about to cross, but it's already below it. We're good. So that's all we want to know, is that this is on the proper side since we're trying to sell this. The next thing is we go back to our main chart and we just simply enter the trade just above or pretty much on the 50 EMA. As long as you're on or above the 50 EMA in a sell situation, then you're good. That was, again, another 100 and something pips. That was an easy catch, really down to 200 and something pips on that one, because it's still going. Here's another example. And these are all just recent examples. And then what I'm going to do after this is go into some screenshots that I had from way back when I came up with the strategy, just to kind of show you a bunch of examples back to back to back. And then the process is going to start clicking. All right, so we're right here now on H1. The minor support that got broke on this one is going to just be this little area right here. So price came down, came up, then it broke through that. And then we have this H1 candle that peaks above this 10 EMA right here. Now, cool. Oh, and also we've got our sharp fin above the 50 when that happens. All right. We go down to the 15-minute chart. And let's go ahead and go to our reassurance template. And of course we lose our spot. Here we go. Okay, we're right here. Here, I'll put another arrow there just for, so you make sure you know where to look. This is where we are. And we just crossed over, so we're good. Our 200 is below the 400 in this situation. So we're good on that. So that's all we need that for. Let's go back to the main chart. And we just want to make sure that we enter on or just above the 50 EMA. So you could have entered about right here. That's a smooth, again, 100 and some pips. What I'm going to do now is actually go to, this is how I study. This is how I come up with strategies. I go back and I start back testing and I screenshot examples after example after example so that I can see for sure, like, oh snap, this is definitely like I'm on to something. And so this is just a little like it's in my trading setups folder. So every strategy I have a folder with a bunch of different screenshots showing that it happens. So I'm just going to go through a couple of these. I'll just click on something random. So okay, here's one on G-Chiff. So let's just do it like this. Of course, I'm pointing at where we're looking at, but this right here would have been that support area that got broke. I need to find an example that's a buy, because all these have been sales, but whatever. But this right here would have been the support area that got broken right here. Price came up and barely peaked above that 10. At the same time, we've got our sharp fin right there. I go to my next slide. Well, that's actually where we would have entered, pretty much right here. The next slide is going to show, the reason I have these highlighted is basically just, well, mainly these two is just showing that the 200 is properly below the 400 SMA like it needs to be. But we would have entered the trade right here and caught at least 50 pips for sure. Let's go to the next example. I don't even know what it is. All right, this is one on GJ. Here's a minor support area that got broken. It barely broke, but it's past it. It closed past it. It came up, peaked above the 10. Here's our shark fin. We are clear. Well, I mean, I didn't make my screenshot wide enough on this one, but as you can see, the yellow is on the right side of the red. I mean, the red's up here, the yellow's here, so we're good on that. And then here's where we would have entered on or just above the 50 EMA, and that's another 100 pip trade, it looks like. Let me back out. I'm trying to find where's a buy example. I think I've got, okay, this one looks like it's going up. Yep. All right, cool, bet. So this is an example of what a buy would look like. This is on gold, and this is the resistance in this situation that would have needed to be broken. So I cannot talk today, y'all. Golly, your boy is stuttering like a mug. But this point right here, once price came up and broke above that, that would have been a break of a minor resistance. Then in Asian session, price came down and peaked just below the 10. And then now we've got a shark fin peaking just below the 50 level right here. And then we go and we check. Now in this one, we want our 200 to be above the 400 because we're looking to buy. We have that. Cool. Great. And so we would have entered just right here on or below the 50 EMA. And that's probably a good, man, that's definitely 100 pips on gold. It might be 200. And so essentially, as you can see, that's kind of just how it works. I mean, I'll go through one more example. Just, oh, great. We got another buy. This right here would have been the break of minor resistance on this one. As you can see, the H1 candle came up and broke through this right here. And it came down and peaked just below that 10 EMA and closed past that. At the same time, we've got our shark fin below the 50 because we're looking to buy on this one. Then we've got okay, so here's an example showing it's just about to cross. The 200 isn't above the 400 yet, but it's just about to do it. Like you can tell it's closing in. That's still okay. So that's cool. And so we would have went ahead and entered on or just below the 50. And we would have caught probably about 50 pips on this one pretty easily. The only other thing, there is a little special rule in these Peek-a-10s. Now, everyone that I've showed you so far, actually, let me bag out just a little bit. Everyone I've showed you so far, even on the main chart, the EMAs have been spanned out. Like if we're selling, the EMAs are in order from purple, yellow, white on all of them. If we're selling or if we were buying, they're going to be in order of purple, yellow, white going up. The only time that you don't need to worry about that rule where I say go to the reassurance chart and make sure that the SMA, the rule where I say make sure that these right here are in the right order. The only time you don't have to worry about these is if the Peek-a-10 happens between the purple and the gold, or the 144 and the 50 EMAs on the main chart. So if the Peek-a-10 happens between these, because every other example I showed you is not between that. So for example, like it looks like, let me go back to the H1 right here. Where is it? Here it is right here. So you see how it's not between the purple and the gold on this one, is outside of it. That's how every example I've showed you has looked so far. If it's between it though, you can X out that rule where you have to go looking for these MAs to be in order. I hope that makes sense. But it's in writing, just so we are clear. But here's another example though. In general though, it broke through this little support barely, but it did. If I were able to draw a line, but this is a green shot, so I can't really do it. Came back up, peaked past the 10. And then I don't think I screenshotted all the other rules. Okay, but yeah, I didn't. So basically I was just making this screenshot to remind myself that if it looks like this, I can eliminate one of my rules. So, but as you can see, the rest of the rules would have been met. We got the shark fin, and then you just would have went to M15 and entered on the other side of the 50 EMA on the M15 chart. Same thing on this one. It's just an additional example. The Peek-a-10 happened between the purple and the gold. Here's our shark fin, below the 50. And then we would have bought it on the M15 chart, just below the 50 EMA. Man, I almost forgot to tell you a really important rule to keep you from taking an L. So check this out. First, I'm gonna just go through the normal process and say, hey, looks good so far, but here's why you don't want to take this. Price came down. It made a minor support. It came up and then it came down again and broke through this minor support right here. After that, it came up and then it peaked past the 10. Well, as you can see already, if you would have taken this trade based on, all the other stuff, you'd have got jacked up. But here's why you would have never gotten that trade in the first place after this peaked past the 10. When you go down to M15, this is on the 22nd, notice how the M15 price is down in the bands. It passed through my dotted lines down here. Let me just do like this. If price is coming out of the bands, do not take that trade. Don't do it. Every other example that we looked at, price was not coming out of, because you're going to trade back in this direction. Whatever direction you're trading in, you don't want M15 to have just been coming out of the bands. So if I was looking to sell this, which the way that it was setting up, we were looking to sell this back down. So if we're looking to go back down, then when we're on M15, you don't want price to be coming out the bands like that. Same thing if we were looking to buy and we were, it was going up, we wouldn't want M15 to be coming out the bands. So just throwing that out there. If M15 is coming out the bands, stay out of that trade. So that's the strategy. The Peek-a-10 strategy is kind of tough to catch on to, but I hope showing all those examples, it kind of started to click. Whatever questions you got, just put them in the comments and we'll address them. All right.